Okay, guys, welcome to weekly market outlook with the Forex XP. So, what do we have here today? Today, we'll be looking at the DXY as usual as we look at it. We also look at XAUUSD, then we take one of the USD as the quote currency pairs. We'll take Euro USD, then we also analyze Euro USD. Then we get to know what we are looking for in the next week that we'll be venturing into. Thank you all for joining. Thank you for joining. Okay, so currently, let's see what DXY is doing. What is DXY doing? When you look at this projection from this view, we see DXY to be bullish. But we as Forex traders, we as technical traders, we pay attention to the long range. So let's look at the over a long term. Let's identify our directional bias. What is the overall trend of the dollar index? Those who aren't familiar with the term DXY simply means the dollar index. So looking at the overall trend, that is the monthly chart. We're going to be paying attention to the monthly, the daily, and the 4-hour. And if you really want to make profit while trading Forex, you have to pay attention to the higher time frames because that is what is going to make you identify the overall trend of the market and help you get into a good bias or direction. Okay, so looking at the overall trend of DXY, you can see that DXY in the long run is bearish. It's bearish because you are seeing a series of lower highs and lower lows. You are seeing a series of lower highs and lower lows. We have this over here, and we also have this over here. And we know in this downtrending market, these lower highs are not broken. They are termed as the invalidation point. They are the point at which when the market breaks that level, meaning the trend is no longer valid, and we assume a change in market structure or a break of market structure. So once they are not broken, the trend is still valid and we are in a downtrend. So in a downtrend, what do we expect? That after every retracement, we expect an impulsive move. So the same thing happened over here. When price got here, we saw some consolidations, then price moved back lower. And now price has also gotten traded more than 50% of the range. Price has traded more than 50% of the range, and that is a good place to actually go in for ourselves. Price went into deep premium, then it gave us some bearishness. And per even the market structure, there's a possibility that price is going to trade back up here before it resumes its actual bearishness. So looking at this, what do we expect? We realize that when price got here, it actually gave us some consolidations before we had this massive drop. That is the same thing that we should expect. Since it's a downtrend, we should expect some double tops before the bearish move down. So this is what we expect. It's a downtrend, so that is what is going to happen. After this correction or retracement, we expect another impulsive move to break this level to give us a new lower low to confirm the bearish market structure. So let's zoom in and try to identify other technical tools that will help us go into the direction that we want. But let's look at something here. Looking at the current market trend, this is what we are seeing. Even though we are looking for bearish opportunities, we should never avoid or disregard the current state that the market is trading in. For we are in the monthly time frame, and it takes some number of years for you to actually see this type of price action. So looking at this, it's currently bullish. And even though we are looking for bearish opportunities, since it's bullish, we only go in for bullishness or sells when we see price breaking the current bullish market structure. And looking at this, we are currently seeing some consolidations over here. And we know the 3-power rule, that is the AMD, accumulation, manipulation, and distribution. So whenever you see this range, there is some accumulation taking place. And after every accumulation, after the market accumulating contract, they manipulate the market before they actually distribute into the actual direction that they want to go to. And we here on the monthly time frame, we've got to know that the actual direction is the sell direction. So when there is going to be a manipulation, they're actually going to break this current consolidation or range upwards, then distribute in the actual direction. Because we can even know that we can even identify some bearish order block here, which means it will be fulfilling the return to order RTO, price or return to order, as a form of manipulation. Then there will be a distribution. Let's move down lower. DXY, we do not trade DXY on the forex market, but however, when we're able to analyze it, we can use it to make informed decisions on the other currency pairs that we have on the chart. So looking at the daily, let's try to see if the lower time frames will also be aligning with what we are seeing on the monthly time frame. So looking at the daily time frame, what do we have here? What do we have here? So that small consolidation that we saw, it is actually some market movement down here. And when you scale down, you can see that we are having some downtrend. This is daily, so it took some weeks and months to actually give us this structure. So don't underestimate this structure. We are seeing a downtrend over here. So let's identify the clear trend that the market is currently in. So identifying this clear trend, this is what we are seeing. So you see the market is conforming or confirming our bullishness that we are looking out for before the actual sells. We have this other block, bearish order block also here. We have this bearish order block also here. Let me adjust it so that it can. Okay. So you see the market is confirming. We're having some bearish structure over here. And here we had a break in the trend. And after the break, price has given us a retest. And we can see the market closed in its bullishness. So this market, when this market opens back on Monday, this is what you should expect. That the DXY moves up before the bearishness actually begins. So how many pips are we looking at here? The DXY can actually go for like, let's say 300 pips, approximately 300 pips. So we should expect a push up for approximately 300 pips before the DXY begins its actual sells. So since we know what we expect on the DXY, we expect price to actually move up before the push down. So we expect the opposite on the currency pair that has the dollar as the quote currency. So let's take a look at the XAUUSD, one of my favorite pairs, XAUUSD. All right. So looking at XAUUSD, let's take a look at the chart of XAUUSD and let's see what we'll be looking out for. So the same thing with XAUUSD, we'll scale down to 4 hours because it's tradable. And personally, I'll be trading it in the week. Let's analyze it. So looking at the 1 month to actually see the overall trend of XAUUSD. Let's identify the overall trend of XAUUSD. So looking at this current structure, what do you think it is? It's obviously an uptrend. And you can see that it is the direct opposite of the dollar index. As the dollar index is obviously a downtrend, this one is also an uptrend. So when there is an appreciation in gold, the dollar also loses or depreciates. When there is an appreciation in the price of the dollar, the gold also depreciates. So looking at using the analysis we made earlier on DXY, let's also analyze XAU to see if they align. Because on the market, we have something called correlation. It's just that of late, the correlation in the market are not that accurate as compared to previously. There are some frustrations. As the Russia and Ukraine war came, there were some complications in the market. This is not making things as stable as they used to be before. But let's see. Gold also in the long run is an uptrend. In an uptrending market, what do you look out for? We look out for buys. So as we scale lower, all what we are looking out for is the times, because we say something that fundamental analysis shows you what to trade, but the technical analysis shows you when to trade. That is one advantage that we have. We know the good times that we can enter the market. So currently, you know that it's an uptrend, but if you don't know how to know when to enter, you are going to enter at the wrong time, and you might make a loss on the good direction that you're actually in. So let's try to identify some tools that will help us in these decisions. So let's see. This is an uptrend. This is an uptrend. It's an obvious uptrending market. An obvious uptrending market. And the level up here that we see, that is a level that has been retested several times but not broken. And in technical analysis, we have something called liquidity, and we have types of liquidity. We have the internal liquidity and we have external liquidity. This is an example of an external liquidity. Equal highs, triple tops. It is also a strong resistance level. However, when it gets broken, meaning price is going to continue moving up until it finds a new resistance. Until it finds a new resistance. But since we are also looking out for bearishness on the dollar index, there's a high possibility that this liquidity is going to be raided. There's a very high possibility, because if the dollar index is going to depreciate in price, then the gold is also going to appreciate. And if it appreciates, it's going to clear all this liquidity up here, because there are a lot of people who have their stops resting up here, just because when price traded to that level on the 3rd of August 2020, we saw some sales. Price got there the same at that same level. I think somewhere around March 1st, 2022, we had some sell. And this year also, price got to that same level 1st May 2023, and we are as the sales is beginning to resume. It's giving us some treats of actually giving us some bearishness. So there are a lot of people who are going to go in for sales and put their stop loss up here. And you know, the market also delights in hitting your stop loss and making their profit. So they are definitely going to come there in full vim. And as we are privileged to this knowledge, we also trade in the direction of the actual market, so that we do not find ourselves corporate of this liquidity rate. So looking at this overall, if you identify the overall trend that gold in the long run is bullish, and with its bullishness currently, it was restricted by this resistance level. That is what is making it accumulate over here. So let's scale lower to see if you can find other technical tools that can help us in our journey. But before that, let's try to identify some reaction zones, reaction areas. This is an order block, but it was broken at this level. So it has become a breaker block. Realize that when price got there were some reactions. This is monthly. Even if you see a week, it actually took some number of days. So there was a reaction over there, then price broke up, went consolidated above, so it came here. Let's see what actually caused this stop. Okay, there was also some order flow. There was an order flow. Okay, you see, this thing didn't just return. It had a level that actually restricted its movement or served as a price support for it. Before this move upward. So if I identify some major tools on the market, there is this thing also over here. This is also a bearish order block that has been broken. You have to pay attention to all of them, so that when we scale lower, we know the regions we are dealing in. So let's go to the daily time frame to see what is going on. So you see the regions that we made known. Okay. All right, so this is what gold is currently doing. So let's see something. Okay. So identifying this trend, give us this triple button, then we had this big move upwards, and price has never come there again. Okay. All right. So this is what gold was also doing. was giving us respecting this trend, came down here, then it went back up, came here, consolidated around that region, broke it, came but didn't give a full retest. Then we had this. And we know this level is also a level that has been broken. And when price breaks a particular level, we expect it to move in the direction of the break until it finds a new support level. And as you can see here, there is a confluence. There is another block, a support level, confluencing with a trend line that has been broken, that has not been retested. That hasn't been retested. The retest happened during this accumulation, but this one is an obvious accumulation. But for a true retest, we haven't had some in days. And that's the liquidity zone also. And looking at the technical analysis, history tends to repeat itself. And there are certain price patterns that when they happen, it depicts the movement. We saw this double bottom, then price spiked back up. We saw this triple bottom, price spiked up. So what are we seeing? Over here? You get to realize that when price got to this level, let me see, I'm looking for, all right, this price got here. Give us this. Let me clone it down. We also had this. It's giving us a W formation. And with every complete W formation, after it has formed, what we see is a bullish move up. So let's see the restrictions or the series objections. I don't know the right way to use it. But the obstacles that the price is going to face as it forms this thing. As for the market, one thing I have to know, you cannot control the price. What you do is to actually study the price movement and use it to make good and informed trading decisions. So even though we are looking out for gold to be bullish, you have to also pay attention to currently what is going on. What is going on the chart? You can't just make analysis on DXY and say, since you are expecting it to push up, push up before it sells, then you just come here, then you sell gold because you know that when the push up is occurring, gold is going to sell. So let's also pay attention to the current trend and see if it aligns. The current trend is down. And price is currently standing on the trend line. And in a downtrend, what we expect is that we expect price to move down. We'll move down to this support level. Then we expect price to break back up here. Break that level, then we have this nice move up. So this is what we expect on XAUUSD. That is gold. Since we are expecting a move up on DXY, there is also a possibility that gold is also going to move down. And it is even confluencing. It is at the downtrending line. Price is currently trading on the trend line. However, if there is a break of this trend line, we expect price to also be objected by this area. But if it breaks this area also, then here is a confirmation for our analysis that actually gold is ready to be bullish. If price breaks this area, let me give you the price. If price breaks 1990.23, price breaks that level, meaning gold is ready to resume its bullishness. However, if price, let me do the color green, ready to resume its bullishness. However, If price also breaks this level, price also breaks this level, this is what is going to happen if price breaks this level. We will see some methods then trace back here before price comes to clear this liquidity. Before price comes to clear this liquidity. Okay, so these are the various projections we are looking on XAUUSD. But this one is if. This one is a if, but this is the actual one that we are looking at. This is the actual thing that I'm looking at in the week. In the week. This is what we are looking at. So we expect some sales. So currently, if you want to look out for some trades, you expect some sales on XAUUSD because there will be some bullishness on DXY. There's going to be a corresponding bearishness on XAUUSD. Let's say USD. Okay, and I've given you the price levels. Those in the premium channels, when the setups are ready, I'll be I'll be giving you the signals to actually take them. But for this section is free, and since you have this information, you can also trade on your own. Okay, so let's go to Euro USD. Euro USD. Euro USD. This is on that. Okay, so what is Euro USD also doing? Let's say USD. Okay, so let's go to the 4 hour if I can find something. So coming to the 4 hour, we already know what we are looking out for. So let's clear some of these things from the chart. So you can see what is going on the 4 hour. You can see what is going on the 4 hour. So if we really want to join the sales on XAUSD, paying attention to the current trend, it is an uptrend. Let's consider the wicks because it's an uptrend. So if you want to join in for the sales, this is what you should look out for. After this trend is broken, look out for price to retest this area, then you join the sales. You can take your profit somewhere here. There's a good place to take your profit. So if you are looking out for entries, you wait for the break, then you join. Then your stop loss is slightly above this level, then you take profits. This will be your take profit. Yeah, this is a good risk to reward ratio. If you're looking out for this, when it's ready for the premium pages, I'll just give you the signal to go in for the trade. I'll just give you the signal to go in for the trade. Okay. So let's go to Euro USD. Euro USD. The network wants to be a bit slow right here. We're going to Euro USD. Let's use the monthly chart. What do we have here? What do we have here? What do we have here? So looking at the monthly chart, what do we see? The overall trend for Euro USD. Let's clear the chart. Let's see what is going on Euro USD. So this is Euro USD. The overall trend is bearish. It's very clear. It's one of the pairs with the clearest trend. Let's look at those touches. Okay. Euro USD is one of the pairs with the clearest trend. So this is Euro USD. And what do we look out for? What do we look out for? Comes here, comes here, comes here. What we expect is for price to come here, then continued bearishness. However, there could be a break, and after every break, we see a retest, then back up. Okay, so let's see. This is the trend for Euro USD. And when we're analyzing XAUSD, we're expecting a push up before a push down. So this one to be expecting a push down before a push up. But let's see what is going on Euro USD. On the monthly time frame, even though it's a bearish market, on the monthly time frame, it's currently bullish. It's currently bullish. You have this, 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 and you're having a retracement. What do we expect? For it to move back up here. This is what we expect. This line is not that clear. This is red. This is what we expect. Okay. Okay. So the monthly, we've identified overall trend. We've paid close attention to the current trend. Let's move to the daily. And let's see what the daily can give us. Let's see the information we can get from the daily chart. On the daily chart also, what are we seeing? We are seeing an uptrend. I've seen an uptrend on the daily chart. There's it. Higher high, higher low, higher high. And we are seeing this retracement. Therefore, we expect this. This is what we expect. An uptrend in the market. Okay. Alright. So let's see. Let's identify some levels where if the market breaks, meaning it is ready to actually move in a particular direction. Let's pay attention to the swing lows. Let's pay attention to the swing lows. Let's pay attention. For the swing lows. Okay. Now looking at this in an uptrend, the higher lows are not broken, they are also respected. However, if they are broken, meaning the trend is about to change or there is about to be a change in market structure. So we know one thing for sure, that in an uptrending market, these levels are not broken. And let's look out for, you have this bullish order block over here. You have this bullish order block over here. Okay. This bullish order block, price has currently broken this level. Price has broken this level. And since it has broken that level, we are going to continue seeing this bearishness until it finds a new support level. And we know this is also a support level. So this is what Euro USD is going to do. Just the exact opposite for the dollar index. The dollar index is going to move up, then we see the sells. Euro USD is going to move down, then we see the buys. So when the market opens, this is what you should look out for: a push down respecting this swing low, then a push gap back. So this is the daily chart. Let's move to the 4 hour to give us further confirmations on entering this type of trade, entering this trade. So on the 4 hour, to paying attention to the current structure is bearish. Let's identify the clear trend. Identifying the clear trend is what we have. The best touches. Okay. So for additional confirmation, after price has come to respect this block, wait for this area to be broken, retested, then you can join the buys. Then you can join the buys, and you can see there's even this bearish order block over here. You can see when price comes back up, breaks this order block, breaks this trend line, retest. It is a high confirmation that you can join for the buys and you can make your profit for the week. Thank you all for joining today's section. It's your guy, the Forex SP, and this is the Xauusd Trading Consult. We offer training services. We also provide signals, and we also give investment ideas. Thank you very much for joining today's section. Thank you all.